Welcome back to Compound Thesis. Our guest today is Lesia Marchenko, and she's the head of institutional at JKL Group. Hey, Lesia, welcome to the show.
Hi, thanks so much for having me here today.
Yeah, super excited. So today we're going to explore JKL's new proprietary AI-powered crypto trading strategies, the latest Web3 trends in Hong Kong, and the potential for Asia to lead the next bull market. So let's start on that part first. So lately it feels like, despite all of the macro news recently, that's kind of shifted the narrative, but it feels like, everybody's been saying that the next bull market is going to start from the east. Do you agree or disagree with this sentiment, and why?
So quite ironically, I have first heard that narrative when I've been on the latest business trip in the US. I've never heard that narrative before here in Hong Kong. I do understand where it's stemming from, but it's important to understand where the Asia capital is flowing from first. So if we talk about China capital suddenly entering the crypto market, that's probably not the case. The latest regulations that have been introduced in Hong Kong, some people believe they will be able to open this magical funnel for China capital to flow into exchanges, into the crypto industry. And the reality is that all mainland China capital has to get a permission to move the money out of the country and into Hong Kong. And the new Hong Kong regulation does not increase this channel in any way. So it does not widen the channel. It does not give any additional permission for mainland capital to get authorization to get moved out of the country. What regulation is important for is for giving more trust to users in using these virtual asset trading platforms. However, the regulation did exist in Hong Kong. The crypto regulation in Hong Kong has existed. So we actually have already two firms that are fully licensed by the SFC, the Hong Kong Financial Regulation, that is OSL. They got their license back in December 2020. And then there's Hashkey that you've actually spoken to in your latest videos. So Hashkey has received their license end of last year. This is a license for virtual asset service platforms and is regulated under Type 1 and Type 7, if I'm not mistaken. So the broker dealing in securities license and the automated trading services license. So just that already shows us that regulation did exist. Those users, those players that wanted to be regulated, they did have channels to get regulated in Hong Kong even before this latest regulation was introduced. So the really innovation regulatory wise here is that now suddenly trading platforms, exchanges have the right to get licensed in Hong Kong and potentially show more trust to users in using crypto assets. Will this unlock a new inflow of capital into the crypto space? Probably not as much as we would want to see, because people who are trading on crypto exchanges are already crypto people. They are already deploying their capital into crypto. So it's not exactly like you are opening a new channel to multi-billion-dollar institutions or large compliance-bound entities. On the other hand side, what might potentially add fuel to the fire and what might potentially open up a new pool of capital would be these brokerage platforms, traditional brokerage platforms opening up to crypto, like we have seen in the US. So if Asia follows the US path from the previous bull run, for sure there is a potential of new capital entering the market. So what we've seen in 2020 and 2021 in the US, we've seen Robinhood, we've seen the Grayscale Trust, IB starting to offer crypto assets on their platforms. And then suddenly all the traditional investors, all the traditional institutional investors got access to this absolutely new alternative investment class. If this happens on traditional brokerage platforms in Hong Kong, it does have a potential to open up new assets. But the current virtual asset trading platform license is not really targeted at brokerage per se. The primary goal of this license is to regulate the crypto exchanges. However, if you read the regulation, it does say that the government might consider opening up or building out the regulatory environment for other players in the market, which we would hope would be these brokerage platforms.
Well, it's positive, I guess, to see, engagement from the regulators and providing some clarity.
Absolutely.
Whether it's, going to unlock a tremendous amount of capital at this stage remains to be seen, at least from your point of view, which is definitely helpful to better understand. But like you mentioned, Fidelity's new digital asset trading business actually launched kind of in stealth a little bit over the last few weeks. And now if you go onto your brokerage account, you can buy Bitcoin and Ethereum through that platform. And so those types of venues will certainly unlock a lot of adoption here in the US. But the fact that there's lacking regulation, I think, keeps people on the sidelines from building those types of channels versus in Hong Kong, it seems like there's more clarity that's being developed and more interaction with the regulators that will hopefully, create new channels of opportunity, which will then unlock. And to your point, those institutions that have already found this asset class interesting have been able to register or get exposure to this space. But there's more that has to be developed in order to unlock traditional pools of capital to allocate towards this.
Absolutely. And just to build on that, just to add one more phrase to this topic, it also comes at a time when US is massively cracking down on crypto. Every bull run, there is some contextual aspect to why this bull run happened. So in the context that US is actually tightening its regulatory policy around crypto, is closing crypto native banks, and in general is seeming to have taken more of a tighter stance on crypto industry. At that same time, Hong Kong opening up the regulation to regulate crypto exchanges might be another catalyst to unlock the Asian market for crypto players. So we are talking here about large international exchanges getting licensed in Hong Kong. We are already looking at least at 2 right now that have moved their headquarters to Hong Kong, opening offices here, setting up base in Hong Kong, and that might be the case that we will be seeing in the next few years.
Well, it's an exciting time to be sitting where you're sitting in Hong Kong. And just before we jumped on, you mentioned that you were at WOW, the Web3 Summit out in Hong Kong. Can you just talk through, some of the insights that you learned or some trends that are emerging from your conversations, either at the show or what you've been seeing from your network over the last, few months?
Absolutely. I really love attending these large international conferences within crypto because you do get to learn a lot. So the WOW Summit I was amazed at the number of international participants that flew into Hong Kong for the summit. I think Hong Kong is a beautiful, sweet spot where capital and projects are, where you can find both. Unlike some conferences where it's mostly either projects looking for capital, or more like industry specific, like mining specific conferences or NFT specific conferences. Here you have the golden mix. In terms of which early stage projects are building in Hong Kong, there's clearly a difference between Western world, the US, and Asia, in that in the US, I'm seeing a lot of like infrastructure projects being built. You have a lot of layer 1s, layer 2s coming up. You have these ZK rollups, the scalability solutions, etc. In Hong Kong, we have a lot of those projects as well, but I think the space generally is dominated by interactive platforms, so Web3 social platforms, Web3 gaming platforms. So there's a lot of tokenization projects as well that I have spoken to. And you know how each conference, there's a dominating number of projects that show you that the space is changing? For me, that was tokenization projects. So I have met quite a few founders that are working on tokenizing, in particular, government bonds, which is a no-brainer, right? I actually had a friend of mine from traditional finance ask me, does USDT pay any dividend? And of course, the answer is no. And they could not understand. They were like, why not? They're making so much money on T-bills, just holding them in their treasuries. So in Hong Kong, you do have projects that are fully asset-backed, that are fully backed by US treasuries. And they, on top of that, they do pay the yield.
Are you seeing, so tokenization can be a pretty broad category, right? Like we're seeing in the US, there's been a couple projects that have tokenized like houses and done mortgages on chain. Or there's been some, folks that are looking at US treasuries and other types of financial assets, whether it's, shares in a private equity fund, like we're seeing out of the Hamilton Lane folks. Are there any particular areas outside of just like bonds or those categories that I mentioned that you saw that are gaining a lot of traction?
Absolutely. I think there's like two aspects. So we can call it all non-fungible tokens, right? Like everyone thinks NFTs are PFPs, but it's so much more than that. You can tokenize any asset. The benefits of tokenization, the first but number one benefit of tokenization is fractionalization. The fact that you can access a much broader pool of investors by fractionalizing, and that's what we have seen in all those multi-billion corporations. That I think KKR last year they tokenized their 4 billion health fund to benefit from fractionalization. I have seen a few real estate tokenization projects here in Hong Kong. There's also a lot of platforms that are being built to service this tokenized future, right? So the thought process behind this is that World Economic Forum, for example, there is a quote that they're projecting that up to 10% of global GDP will be tokenized by 2030, which I personally think is a little bit inflated as a figure, but it's not only tokenization projects that will be spanning out. It's also projects that are servicing this tokenized future. So you will need to build, like you mentioned, mortgages, right? You will need to provide mortgages for these tokenized assets. You will need to provide fractionalization markets for these tokenized assets. You will need to build a whole, like, tokenized assets are virtual assets that have a value assigned to them. So why not develop a derivatives market around them? Why not provide lending platforms like to fuel more liquidity into the tokenization space? So one of the projects actually we are developing in-house, well, incubating, so we're the early investors, is tokenization lending platform. So it's a protocol fully on-chain, so smart contract-based protocol, which is providing liquidity to tokenized assets. And the protocol is permissionless. So the project is looking forward to the tokenized future and looking to provide liquidity for any tokenized asset out there. So the platform itself has a risk framework that assigns a specific risk metric to every tokenized asset and accepts it as a collateral and provides liquidity in exchange. I personally think that's definitely the way the future will work out, because as we've heard a lot of traditional finance pioneers say blockchain, not crypto, which obviously is, I personally do not agree with that phrase. And I think the crypto community generally quite dislikes the phrase. But the idea of the phrase is also that blockchain just makes so much sense, and it's the technology that's here to stay, and tokenized future is actually more blockchain, not crypto.
So I know we just kind of jumped into what's going on in Asia, but we haven't kind of talked about a little bit of background on JKL and yourself. So you've got an interesting path from some of the largest global brands like LVMH, if not the biggest global brand out there. Prior to joining JKL, like what made you switch into Web3 in the digital asset space? And can you give a little bit of background on JKL Group?
Right, of course. I would start explaining what JKL does and then how it kind of ties into my personal story. So right now it's a global digital asset group, which has two main business lines: JKL Mining, which is the mining arm of the business, and JKL Capital, which is the financial arm of the business. So on JKL Mining is quite a recent business. It has been launched in June 2021, pretty much after China cracked down on mining. We started exploring ways to relocate Asian miners into the US, but also just started looking at the space more for ourselves, for our own benefit. On the JKL Capital side, we have asset management business, which does quant trading. We have a lending platform, an OTC desk, and some venture effort. I originally started on JKL Capital side. So JKL Capital existed way before JKL Mining did. And my previous experience was in corporate finance at Bulgari brand of LVMH. And then before that, I had been in cash management at a European bank. So coming from corporate finance, when JKL Asset Management Service launched, the founders, Lynn and GY, were looking for someone who specifically with corporate finance expertise, because they didn't have the need for anyone who's like massively degen in crypto or like DeFi background. They needed someone to come in and build out the reporting, build out the budgeting for the firm. So I joined as investor relations first. My main goal was to onboard clients, withdraw clients, do all the capital flow management, reporting, making sure we provide weekly, monthly communication. And that had expanded. So the founders started deploying, built out the landing platforms. So we were introducing those projects to the clients, built out the venture effort, which is all fully proprietary. So talking to early stage projects, helping find the deal flow, sourcing these projects. Since I had started at the firm and what I do today, the primary tasks have been very dynamic and are completely different to what it was in the beginning. At the same time, I would never have it the other way. At this time, every time there's a new project, so like, for example, recently we have been setting up a mining fund, which is pretty much a low-hanging fruit for us, given that we have the mining and capital business just merged two together. And with it comes the requirements to build out the valuation, again, like from the expertise that comes in from my previous roles. So building out the valuations for this mining business, budgeting exercise, the reporting to the LPs. It was quite a natural flow, I would say, even though just looking at the background, it might not seem so.
Yeah, every business needs some standard FP&A work, but it's good that you wore many different hats, and that's typically the case in a fast-moving business like we're both in. So that's interesting. So let's go dive into the asset management side a little bit. So can you talk a little bit about how you guys manage capital on that front and the types of investors that you work with?
Sure. So our main investors historically have been family offices and high net worth individuals. That's what we focus on. In the recent years, we've also seen an inflow of capital from crypto native firms, or those firms that offer some kind of staking yield to their client. This is due to the nature of our strategies. One is market neutral arbitrage. The other directional strategy, our directional strategies has actually quite tight stop loss limits. The stop loss is the maximum stop loss of our directional strategy is 15%, and we're targeting a 50% annualized return. So it's not exactly those all-in highly leveraged strategies. We do not deploy leverage on either of strategies. Hence our base, which is quite risk averse
and returns. Yeah.
Traditional, exactly, looking for sustainable returns. And this is also where mining actually ties in, because on the mining end, we found this amazing asset class which works well for risk averse investors who want to have a foot in the door, who want to have some exposure to crypto, but do not want to have direct exposure to the volatility in the crypto space. We are building hosting facilities. So we're not exactly in the business of self-mining. We're in the business of building out hosting facilities. So we have the locations, we have the electricity contracts, we build out the data center, and then we onboard our clients, our miners, our firms that own mining rigs that come in and plug in their mining rigs into our facilities. So hosting business is actually a very stable cash flow generating business, which does have some level of exposure to the crypto industry, but at the same time, the underlying does not carry the excessive beta of the crypto space. So the mining fund we're building out offers exactly that. We're offering to run the mining operation for clients and then redistribute profits by the end. So basically, it's an investment for those investors who are interested to get into crypto industry, potentially interested to get into mining, but do not want to get into the whole operating. So do not want to get into container shipping, building out, getting electricity contracts, operating. We would be able to do all that for them.
Yeah, it sounds like more of a traditional real estate finance business, or
Absolutely.
yeah, you just happen to be, your tenants happen to
Yes,
be mining Bitcoin and, potentially.
100%.
Okay, got it. But there's certainly a lot of operational overhead that comes with that, and a lot of scale that you can probably bring to the table, which allows your tenants, or your clients that are operating in your facilities, to lean on the capacity and the expertise that you guys bring to the table. Is that right?
Yes, yes. So on the operating side, obviously, we have our own operating effort. Some clients actually, interestingly, some clients prefer to bring in their own operating teams.
Hmm.
But in general, it's our operating teams that are doing the maintenance, the operation of the machines. So in reality, it is like real estate or data center building, just with a
Right.
better payout schedule. So we have recently, our mining site has recently acquired an operations team. So in reality, we can even offer that as a product. So if there is a potential client which is not looking immediately for hosting locations, but does need some help on the operating side, we can always deploy our team to go and help them out.
So are you seeing more demand on that? I mean, despite, the merge last year for ETH going to proof of stake, are you still seeing a lot of demand on the mining side? And, it looks like hash rates have kind of increased
Yeah.
dramatically over the last few months. So I'd imagine that business has probably bottomed from where it was late last year, when everybody was saying that the mining business model was dead.
It has. So late last year, because of all the Chapter 11s we've seen in the mining space, and that comes naturally with fundraising at the at the peak. I think
Yeah.
the worst thing that happened what that happened for those miners that were struggling last year is entering into long-term fixed contracts of mining machines delivery at the peak prices, because mining machine prices are highly correlated with Bitcoin price. So as we've seen last year, Bitcoin has been on a constant downturn, and as that was happening, the price of mining machines was going down. However, a lot of those miners that we had seen struggle last year had entered into hardware delivery contracts at the peak prices.
Yeah.
So as the market was declining, they still were contractually obliged to pay the bull market price. And on top of that, the funding rate was another concern. So some of those miners were paying huge interest.
Sometimes timing is definitely it can be a headwind or a tailwind. So, but it's good to have the type of diversification I'm sure you have with multiple operators within your facilities that give you more diversification and less kind of like specific risk.
For us, the timing worked out. So we only launched the first facility. We own 5 locations in West Texas. The first facility with 35 megawatts was only launched in July last year. So already, as the bear market was already unrolling, we haven't entered any contracts at the bull market prices. We had basically launched the facility and then have been just waiting for talking to clients, onboarding clients. We have closed up full 35 megawatts capacity end of last year, early this year. So early this year, as of this year, 35 megawatts are fully onboarded. And the reason it took half a year to onboard is because, as you said, mining industry was very slow end of last year. And that has a lot to do, actually, not bear market, but also combined with high electricity prices. Because if you look at the electricity prices, they were quoted quite high end of last year, going into the end of last year. And then beginning of this year, we have seen a decline in electricity prices, almost 50%.
Yeah, no, definitely a lot of macro factors, not just crypto specific, that influence the economics of a mining business. So hopefully, seeing multiple cycles play out helps inform you as you're building your business and your strategy going forward, and to help kind of mitigate some of the volatility or the risk associated with that type of a strategy. So I want to pivot back, if you don't mind, back to the quant strategy. So, it seems like a relatively straightforward risk parameters and target return that you mentioned in terms of your stop loss and the overall hurdle rate that you're looking to achieve. But can you talk a little bit about how you guys are actually managing assets more systematic than discretionary, if I'm not mistaken, and kind of the new frontier of AI models that you guys are working on?
Absolutely. So on the asset management side, at the moment, we're offering two quant strategies. These are not AI yet, but our quant team has been working on AI models for the last 2 years now. So let me start with the quant side. The two strategies we are offering already are arbitrage and directional strategy. So arbitrage, we trade basis, perpetual basis. We also do deploy internally cross-market arbitrage, cross-currency arbitrage. But all those types of arbitrage, we are seeing around 10% per annum gross performance, plus minus a few percent. The one we offer to the clients is the basis trading, which is a very straightforward strategy. When there is a contango effect in the market, when perps trade higher than spot, we would buy spot, sell futures, and reverse. It's fully algo, it's fully automated trading, so there's no discretionary trading whatsoever on our asset management side. It's a proprietary trading system that pulls data from exchanges through an API on the input, processes the data, generates trade signals, and then on the output, it's also linked to exchanges through an API. So our trading department does monitor the platform 24/7. But that's probably as much of traders' input as we have in our models. At the same time, the quants, they are constantly adding models to the system, constantly looking for more data sources to plug in. So I would say when human touch comes in is mostly on the quant side, developing and upgrading the model. The same goes to our directional strategy. Our directional strategy is a CTA type traditional finance strategy, following basically the way it works. It's also in a proprietary trading system. The way it works is there's over 200 statistical models. Each statistical model looks at a different market indicator, analyzes it historically, and makes predictions, generates trade signals. Only those out of the 200 statistical models, only those with the highest weight will be executed. And the stop loss of this strategy is at 15%. We are targeting 50% return, but it's a great strategy for a market with a strong trend, because the CTA strategy looks at trend following and mean reversion signals. So whenever there is a strong trend in the market, either upside or downside, because we do trade perps, so we can go long short. It's basically a long short algo strategy in different terms. So in a market with strong trends, the strategy performs quite well. And the worst type of environment for the strategy would be a sideways moving market with strong hourly data volatility, in which case the strategy would just cut loss pretty fast. Those are the two quant trading strategies. Now the AI trading strategy is quite exciting, and it was quite surprising for us to see all the hype around AI beginning of this year, because our team has been working on it for quite a while now. And just talking to them, we haven't rolled out the product for clients yet, but we are planning to do so by the end of this year. We have already deployed proprietary capital into this AI strategy that the quant team has built out, and we are generating live returns for now. Because obviously when you roll out the product, back testing does not really work for our type of investors. Everyone wants to see live returns, so that's what we're generating now. On the AI side, it's quite similar. So they have the 200 statistical models I mentioned before. They have built over 10 million models.
Oh, I mean, sure. Happy to learn a little bit more about, what that process looks like, and if you could kind of like contrast it to maybe the data sources or signals or inflection points that those models look at.
Absolutely. So let's go step by step of this AI trading strategy building process. The strategy is directional as well. So it's looking at, on a very high level, it's looking at patterns in data and making predictions. Now, when breaking it down into steps, so the first step would be data sources. Like, what data sources does the quant team use? Here we have market data. So they pull in, same as quant strategy, the strategy pulls market data from exchanges through an API. And this type of data is mostly pricing data, it's volumes data, it's the funding rate, etc. So basically all the indicators you can find on exchanges. The second type of data source would be on-chain data, and our quant team gets it from existing data platforms. So they have tested and onboarded with a few of the big on-chain data providers, and that's where they get such data as, for example, on-chain inflows, outflows, or some large transaction count. If you open any of those data platforms, you would see the on-chain and indicators. They all go for good use to add to the AI strategy. And then the final source of data would be sentiment data. So sentiment data, depending, some providers build it out themselves, code it down themselves. Some providers just get information from other data platforms. It could be existing data platforms as well. And basically, all of those are looking at social platforms, at Twitter, at Reddit, at Discord, searching by a specific indicator. So if you're looking at a specific coin sentiment, it would be looking at all the tweets or all the posts containing that particular crypto coin, and assigning some negative or positive parameters to some words that might be potentially embedded in that tweet, and then deriving the general sentiment around that coin.
Oh, awesome. Does it look at macro data as well? Like I would imagine that, the macro landscape
Yes.
will impact sentiment, which impacts flows and, funding rates and all of the micro specific data. But is there any, top-down interest rate or any other type of macro data that goes into the models?
Absolutely. As especially given that would fall into the market data category. So especially given the correlation with the traditional risk on assets, the AI models do have S&P data, do have the risk on asset price data, volume data embedded as well. It actually, sometimes it would improve the prediction accuracy of the model.
Yeah, it's interesting to see how this is all built out, and kind of embedded a little bit in what you said at the beginning is, developers leads to hype, and then hype leads to actually implementing strategies. And so, it's good to see that your team has been working on this for a while and starting to produce returns in live production environments to then show to investors to hopefully unlock additional opportunities for your current and potentially new LPs as well.
Absolutely. Even though I guess my point would be that even though we've only heard the hype beginning of this year, teams have been working on it for years and years, and there are some teams that are rolling out amazing products, like even the ChatGPT and the Midjourneys of the world. They didn't only come out beginning of this year. There have been teams that have been working on it for years now. And the interesting thing with AI, the way the strategies make predictions, just to wrap up my story, the way they make predictions is different from the quant strategies. So there are two considerations. One is learning from the future. And actually, this was the concept that when I was talking to our quants, I found it quite interesting. The second part would be learning from an expert. So there's two ways. One is plugging in data into an AI, and then AI at a particular point in time, say January 1, 2019, it would make a prediction. And then it looks at a specific timeline later, so looks 1 week later, and learns where its prediction was correct. So that is the concept of learning from the future. And another concept would be learning from an expert. And that is actually where discretionary trading might potentially tie in. So if you have a genius trader, human trader, you might embed his decisions into the AI, in which case AI would try to beat him. So AI would first, given a certain amount of data is provided, the AI would try to understand how that particular trader, how that particular expert made his decision, and then try to reverse engineer it and embed it in its own decision-making process.
That's interesting. Yeah, I mean, and the beauty of some of the on-chain data providers that you mentioned tag large whale accounts, and so being able to follow and predict those types of strategies from an AI perspective, and unpacking what worked and what didn't, and following those, I'm sure is tremendously valuable for creating the models themselves. It's being able to actually track the flows of individual accounts and find ways to beat and or mimic, those types of strategies?
So the AI would make the decision in the end, right? If it finds that it's specific data indicators might either improve or actually decrease the accuracy of prediction. So if the AI sees that particular inflow outflow data or particular transaction count data improves the strategy, it would deploy those. So like I mentioned before, the number I mentioned before, that 10 million models developed, think of them as 10 million employees.
Mm-hmm.
Okay, that's a bit difficult to think of, but some of them will be better performers, some of them will be worse performers. So the pool that we are using for the actual strategy that is running capital is only a few hundreds. So out of the 10 million models, it's only a few hundred actually contributing to decision making. So the pool is actually much more limited than the whole universe of tested models. And basically that's what our quant team does. They just constantly build new models and see if adding them to the pool would improve the accuracy of predictions.
That makes sense. Yeah. And then so you layer a zero multiplier on every other model that would not contribute towards that strategy, and just weight heavily the 200 or so that make the cut, if you will. So very interesting. Well, I appreciate you taking some time to walk us through all that JKL is up to. It sounds like quite a diverse portfolio, from mining to venture to quant and AI strategies. So a lot that you offer to your investors. Any other takeaways or closing thoughts before we let you go?
Yeah, I guess just from the general sentiment right now, everyone is looking forward to the next bull run. There are some macro, like you mentioned, there are some macro indicators that are impacting the defrost in the mining industry, like the decreasing electricity prices. But at the same time, we all know that there is the halving cycle. Previously, the problem is that the historical data is not enough. We've only seen three halving cycles so far that did coincide with bull runs. Does not necessarily mean that the next one will do so, but there is a general sentiment that 2024 will be a big year, and everyone, all the builders, all the founders we're talking to are working towards it, trying to predict what will be the next trends, because the previous bull markets we have seen particular trend dominating the bull run, whether it was NFTs, whether it was GameFi. Right now the question is whether it will be tokenization, because tokenization, and specifically liquidity providing for tokenized assets, might unlock new capital. Right? If you provide liquidity to those NFT holders that have some locked liquidity in their assets, that would provide new capital to the space. Building derivative markets around NFTs would unlock some new capital in the space. Whether it will be like tokenizing traditional finance assets, whether it will be AI, something completely different. I think everyone is working on predicting what will be the next big thing, and I will stay away from making any particular predictions, even though I think from today's episode you've seen what I'm massively skewed towards so far. But I think the next year is going to be very dynamic, interesting to watch in the crypto space, and let's hope that macro improves, because for crypto to really unlock its potential, obviously we have to see some macro improvements as well.
Absolutely. Well, as you pointed out, a lot of the narratives that have driven bull markets prior to this cycle have been kind of single-threaded, and it seems like there's still a ton of developer, founder capital, just going to the space, and could be multiple different themes that propel us to the next cycle. But we're already seeing a lot of improvement in the space, and as you saw on the ground in Hong Kong last week, a lot of eager, excited, and sophisticated people continuing to build. And so that definitely gives a lot of confidence for us in continuing to move forward in this industry. And for all the listeners out there, we really appreciate everybody tuning in. Listen and subscribe to Compound Thesis on YouTube, Apple, or Spotify. And you can find all of our episodes on youtube.com/@compoundlabs. Lesia, if people want to get in touch with you, how can they reach out?
Twitter, LinkedIn. I'm mostly Twitter, I don't even know my handle
It's all right.
actually. It's not big on Twitter, but LinkedIn, it's Lesia Marchenko at JKL Group. That's quite easy. If not, lesia.m@jkl.group is my email. If you want to shoot any questions or have any ideas of how we can work together.
Awesome. Well, I'm sure those that have not been able to write that down, reach out to me. I'll put you in touch. Lesia is fantastic. I'm sure everybody will benefit from connecting with her. So thank you everybody for joining again. If you enjoyed today's show, share it with a friend and stay tuned for our next episode. Thanks again, Lesia.
Thank you. Thank you.